Let's get straight to it. This week's video is all about Jerome Powell's latest comments, the risk environment, and why geopolitically things are starting to fall into place. I am Ivo, the Stock's chief market analyst, and let's start with the here and now. What we are seeing now is a classic hedge unwind. Traders are rolling positions and dealers are likely buying against the dip. This is giving the market some lift, but despite all of this, the downside risk is still real. Why? Well, because even though this week was set up for supportive flows, the bigger picture points to something else. Volatility is about to expand, and this is likely to happen after, well, basically this week and going forward. This has been the pattern during the last two cycles, and it's setting up again. We've had a chop fest, and which has been driving positioning and flows, but that's changing. After this week, this becomes a headline-driven market yet again, and volatility will likely rise. The VIX goes up, and that likely means more downside risk, not less. Let's get to Jerome Powell. His comments last week were extremely hawkish, and he suggested volatility will stick around longer, making any long positions less attractive. The VIX was actually down and heading into his speech, but it reversed sharply right after. That was a warning sign. And what did Paul say? Well, the effects of tariff policy will likely move the Fed away from its goals for the balance of this year. Perhaps we can resume progress next year. If you're looking for the translation of this, well, we are not getting rate cuts anytime soon. And that's actually a big problem for Trump. See, Trump is playing a geopolitical game, and he's using tariffs as leverage not just against China, but also to push Europe towards a peace deal with Russia on Ukraine. And Trump wants to ally with Russia, and Putin's open to that, but only if Trump can broker a peace and Europe is the holdout still funding Ukraine's war. So, to isolate Europe, Trump needs China on the sidelines, and if China aligns with Europe, Trump's tariffs lose bite. That's why we're seeing this weird back and forth on tariffs. It's all about positioning, and to be honest, it's likely working. So, China actually made some key comments. To quote, China is open to negotiations, willing to include Europe in a mutual opening up. So this is not random. That is a signal, and it's saying to the US, come to the table, we'll play ball. And the deal is here, but they're playing hard to get. So while the headlines seem chaotic, there's a resolution coming, and when it hits, it will hit fast. And that's why you might consider some exposure to the market. Be hedged, of course, and you can hold cash, but I don't think 100% cash might be the best move, because when the turnaround comes, it will be violent and it will be fast. Also, a quick note on leverage. Be careful. This is not the time to use your entire buying power. The S&P is basically moving like a meme stock. You can have a 4% rally and still be stuck in a downtrend. So, with that said, let's touch on another big geopolitical angle, which is Japan. Talks with Japan last week were actually productive, and you might be asking yourself, why does this matter? Well, because Japan holds the most US treasuries in the world, and the recent bond market weakness, well, it's largely due to Japan selling, and Trump knows this. If bond yields spike, pensions suffer, and the economy could tip into a deep recession. This is something Trump cannot afford with the midterms coming up. And if Japan's bond selling risk is off the table for now. That gives Trump more room to push tariffs for longer, and this, unfortunately, is not great short term, but it does bring us closer to the final resolution. And because basically, once Europe is cornered, the tariffs can come off, and they will come off completely. So to wrap all of this up, don't chase the rally blindly. Volatility will likely expand this week and going forward. Powell's hawkish stance means no Fed help for now. That's a big risk. Geopolitically, things are starting to fall into place. Tariffs, Europe, China, Japan, it's all a part of a complex game that's starting to actually make sense. And the final thing is, do not get complacent with risk and risk management. Stay nimble, manage your positions, and be careful. So, now on to some technical analysis. Let's start with the S&P 500. The main resistance is likely to be 5300. So from 5300 to 5330. So, and if this level is broken, it will likely trigger more upside. After that, watch out for 5400 and 5450. The main support is at 5200, and if it's broken, we could definitely head towards the 5000 mark, so keep that on your chart. Gold continues to rally, and right now it's looking a bit overbought, so make sure you manage your position properly. I get a lot of questions on whether it's time to short. Well, I think it's not. Keep in mind that markets can remain irrational more than you can remain solvent, and right now sentiment remains rather positive. In terms of FX, a lot of traders have begun positioning for continued weakness, and it's at risk for dropping below the key resistance on the dollar index. You can see on screen. We're also looking at test of the long-term trend line on the cable, which is trader talk for the sterling dollar. But what needs to be mentioned is that we got some good readings on the UK CPI, which actually saved the day for the cable. For now, the Euro USD might be the way to go if you are trying to play against the dollar. Okay, so time for some crypto. Bitcoin continues to chop below the 200-day EMA and below the trend line. Keep an eye on it as it might break higher soon. Okay, next to macro and the events this week. This Monday, the US and EU markets will be closed for Easter. Tuesday starts with an IMF meeting and a 2-year US note auction. Make sure to listen to Fed's Kashkari speech as it might move the markets a bit. He tends to be more hawkish, and that's exactly what the market does not want to hear right now. On Wednesday, we have a lot of PMI data for the EU and some PMIs for the US as well. Thursday will be volatile as we have the initial jobless claims from the US and the IFO for Germany. On Friday, keep an eye on the Tokyo CPI, retail sales for the UK, and Michigan consumer confidence for the US, as well as the 1 in 5 year consumer inflation expectations. It's easy to forget it's earnings season, especially given the entire geopolitical situation. But Monday, we have some regional banks reporting. Tuesday is Tesla and SAP. I will definitely be interested in seeing what Tesla's forward guidance will say. Wednesday, we have Boeing and AT&T, of course, IBM. Thursday and Friday, markets will focus on Intel, Alphabet, and American Airlines. Thank you for watching, stay sharp, and I'll catch you in the next video.